Hello, Kurt Jackson here from KJ Financial in Liberty, Missouri on Retirement Bliss TV. Hey, thanks for checking out this installment of our educational video series on how Obamacare is going to impact us. If you haven't watched our video where we introduce you to Obamacare, then go ahead and stop this video, go back and watch it. Because without watching it, you're likely going to be missing a lot of context, thus rendering this installment on how Obamacare is going to impact individuals and their families a lot less effective. You really need to have the proper context from that first video to better understand the information here. You can find it in our library of videos. Look for Obamacare Introduction Installment 1. Okay. After you've viewed it, then come back here and check out this installment. I encourage you to watch the entire series. It should help you better understand what you'll likely be facing in the future. Let's get into how it's going to impact individuals and their families. So for those of us that are under 65, if your household income is less than 133% of the federal poverty line, that's not your adjusted gross income, that's your total household income, you're going to be enrolled into Medicaid. Okay. In 2013, a single person that has a total household income less than $15,282 qualifies for Medicaid. A family of four, that number is $31,322. You can add $5,347 per person to figure out if you have 2 people, 3 people in your family, or if you have more than 4. Okay. If you have trouble with that, give me a holler and I'll help you figure it out. So everyone in that income level or less is going to qualify for free health care. Keep in mind that those that fall into this category are also going to be subject to Medicaid's ability to seize any assets that you may have after your death to help repay the money that Medicaid spent on your care and now also on your insurance premiums. Look, there's also a possibility in some states where Medicaid can come after your kids to recoup these costs after your death. Now, it remains to be seen if coming after the kids is going to be something they're going to be seeing more and more of or not. My guess is that there's a good chance it will be as the government tries to find more ways to pay for all the promises, okay, that they've made. Now, interestingly, a recent study has some implications where the level of health between people on Medicaid and people without health insurance were essentially the same. Now, that doesn't bode too well for those 10 to 15 million people that we are likely adding to the Medicaid rolls. One of the reasons could revolve the fact that the care level given to Medicaid patients may not be as good as other areas. Basically, Medicaid reimburses about 56% of what medical providers can get from private insurance. Now, that's pre-Obamacare, okay? This explains why so few medical providers accept Medicaid. If you remember back to the Disney World example in the introductory video, imagine what adding 10 to 15 million people onto the Medicaid rolls will do to those providers that are already overburdened with patients. Does that sound like a plan that's going to work very well? Now, if you're between 133% and 400% of the federal poverty level, 400% for a single person is $45,960. For a family of 4, it's $94,200. You can add $16,080 for every person over that or in between there, okay? So, if you make that or less, you will be eligible for subsidies or tax credits to help you offset your health insurance premiums. Now, in order to get these subsidies, you're going to have to buy your insurance from the federal or state exchange and buy a silver, gold, or platinum package. The way I understand it is the bronze package isn't going to qualify for the subsidy, okay? Nor will any of the plans that health insurance company offer on their private exchanges. So you have to go to the government, the state or federal, to get the subsidies. Now, the private exchanges are said that they're going to have more options. Okay, they will also offer the same bronze, silver, gold, and platinum that you see on the public exchanges. They'll have those on the private exchanges. And they have to be exactly like those plans on the state and federal exchanges. And they have to be offered at the same price. But they're going to be able to offer other options too. At the time I recorded this, I don't know what those options are going to be, okay? That doesn't mean each company is going to price them the same. It means that each company must price their packages the same on each exchange. So the gold package on the government exchange and the gold package on the private exchange for company X has to be the same, okay? But company Y's silver package could be higher or lower than company X's. I hope that explains that. At the time I recorded this, there were 17 states and Washington, D.C. that have signed up to do their own exchange. Okay, states like Missouri, where I am, have opted to let the federal government be their exchange. Look, I foresee serious issues trying to implement these exchanges, especially the federal one. I picture some real frustration, and it's likely going to take the assistance of a professional health insurance salesperson that is well versed in how Obamacare works to help you through all of this. Look, I fully realize that sounds very self-serving, but just because it sounds self-serving doesn't mean it's not true, okay? Now, the plans that are out there are based on how much of your estimated health care costs the insurances are expecting to pay, okay? The bronze is expecting the insurance companies to pay 60% of your health care costs. That means you're going to be responsible for 40%. The silver is a 70% health insurance, 30% to you. Gold is 80% to health insurance, 20% to you. Platinum is 90% to insurance, 10% to you. Now, obviously, the more the insurance company will cover, the more your premiums are going to be. Now, one good part of this is since the plans are required to offer the same things, it's going to be easier to shop via price. Now, that doesn't mean the service or the medical providers are going to be are what you're expecting, okay? But that you'll be able to see what the prices are on exact same plans. They have the same coverages. Subsidies for incomes that go up to 94.2 for a family of 4. That sounds okay, doesn't it? And it should help keep the costs down some. The problem is that the costs will likely be much higher, okay? And as we had talked about earlier, due to all of what the insurance companies have to offer with the guaranteed issue, the no higher premiums for higher risk classes other than smoking, no caps, all the essential benefits, those are going to make our costs higher. I found a cost estimator online at the Kaiser Family Foundation. That's kff.org. KF as in Frank, F as in Frank.org. That's just an estimator, but it does share what they think the premiums are likely to be on average around the country. Now, here are some of the results from the calculator that I ran there. Now, these are all hypothetical, and I used the silver plan since the bronze plan won't qualify for the subsidies and won't qualify for your employer to have to avoid their fine. If we assume a 45-year-old non-tobacco adult making $50,000 per year, their annual premium would be $4,358 or $363 a month. There would be no subsidy in this situation because they're making more than 400% of the poverty level. If they use tobacco, it goes up to $65.37 or $545 per month. From what I saw, the use of tobacco added a little more than about $2,000 to the premium per tobacco user. So you could add that much to try to follow along with with these hypothetical scenarios. Now, if we assume our 45-year-old has one child, the premiums are estimated to be $62.75 or $523 a month. But since we're now lower than the 400% of the poverty level, there's a subsidy available. In this hypothetical example, that subsidy was $15.25 if you got your plan from the government exchanges, the federal or state, right? So your actual monthly premium is $396, okay, versus $523. If we now assume it's a married 45-year-old couple with 2 kids making $50,000, their insurance premium would be $12,549 per year or $1,046 per month. But they would qualify for $9,235 in subsidies, which would lower their premiums to $276 per month. Now, $276 per month is still a lot of money for someone that has $50,000 in income. If that married couple happened to make $100,000, then there would not be a subsidy because their income is above 400% of that poverty level for a family of 4. They would have to pay $12,549 or $1,046 per month to cover their family, assuming they were all non-tobacco users. Now, look, I don't know what the co-pays, co-insurance, and deductibles are going to be on this plan. All right, those haven't been released. But I do know that the total out-of-pocket expenses are limited to $12,500, not including the premiums that you paid. Folks, that's a lot of potential out-of-pocket expenses for premiums that are that high. Now, would it or could it make sense to hypothetically not get the insurance and pay the fine? Well, if they did that, if we're assuming the $100,000 employee, okay, that makes $100,000, their maximum penalty, which would hit in 2016, there's a lower penalty in 2014, a little higher in 2015, 2016. From then on, it would be 2.5%. Well, that's $2,500. That's a tad over $200 a month. What kind of alternative plan could we potentially build for less than $800? Okay, $200 for the fine, $800 for this. We're still lower than the $1,000 that they would have paid under the initial assumption. Okay, that's where I'm going with this. Look, I'm not going to go into details about those plans here, but suffice it to say that there's ways to create a plan that could give you similar or maybe even cheaper out-of-pocket expenses for the minor things that you go to the doctor for, such as a sinus infection, ear infection, and those trips entail about 70% of all doctor's visits, okay? Sometimes you can make those visits for no money out of pocket, or even get some money back if you're smart about how you set up your plan. Now, these alternative plans can be structured to cover just about everything you want them to cover. Usually we find that they're 20% to 50% cheaper per month, okay? Now, your real risk exposure is that if there was something catastrophic, then your out-of-pocket maximums tend to be a couple grand higher than they would be with the insurance. Now, that might be a good trade-off if, let's say we save $350 a month on premiums, okay? In 10 months, you've banked $3,500 in savings. Now, could you use that to offset the extra risk exposure from a catastrophic health event? Okay? And those typically don't happen all that often. The point I'm trying to make here is to make sure that you're working with a knowledgeable financial professional that's well-versed in Obamacare and health insurance and how all of this works, that can guide you through all these scenarios and options to make sure that you're getting the best coverage for the least amount of money, even if you go against what all the media says, the health insurance companies, and the government's telling you to do. Okay? I would highly recommend you check out the video on Obamacare and how it's going to impact businesses, because chances are you work for a business. So you need to be aware of how it's going to impact your business owner. And who knows, you may end up knowing more than the business owners know, and you can tell them to come watch these videos or to call me so I can help set them up with the best plan for handling Obamacare. You should also check out the video on how Obamacare will impact seniors. I mean, isn't it your goal to be one someday? Or you got parents that might be there already or getting close? If you'd like to see some of the answers of how to solve Obamacare, make sure you check out the last video in our Obamacare series about the solutions to solving Obamacare. It should help you shed some light on those options if you decide you want to navigate it on your own, okay? If you have any questions about this information or have had enough and want to get some help navigating the treacherous waters that are coming with Obamacare, go ahead and look at the contact me via the number or the email that's on the screen now. Hey, I want to thank you so much for checking out our video here at Retirement Bliss TV. Make sure you check out our ever-growing library of educational videos on the right side of your screen. If you're finding value in the videos, but only if you find value, then please share our Retirement Bliss TV YouTube channel with your friends and family, because they deserve to know this information too. All right, until the next time we talk, have a great day and an even better tomorrow. Thanks for tuning in.